Good morning, friends. Well, again, Abhishek Raj here on Ask Abhishek Raj with the daily dose here. A new week starts. Happy Monday to all of you. A new week, a full action packed week. It's expected to be lots of things lined up. So, let's take a look at what all could influence equities today. Number one, FIIs have been net buyers of above 9,000 crores, while DIIs has been selling approximately around 2,100 crores in the previous week. Both volatility and option chain suggests a range of 11,000 to 11,500 with positive biasness. This week we have some data points which are expected to release at several points of time in the week, both Indian and global. So it's very important and imperative to know so that you can manage the positions accordingly. CPI inflation data is expected to come out on 12th, and on 11th we have industrial output. So on 11th and 12th, that's tomorrow, and day after it's going to be inflation data and industrial output data. Well, there's no surprise that's going to be expected. It's well expected and known that there is a lot of industrial contraction. Inflation has not been in shape, so that's pretty much what market are expecting. And unless and until there is any drastic or dramatic difference between the expectations and the actual data, there is no such major difference or no such major change going to happen in the week. Certain things that yes would add to the sentiments of the market, especially the buyers: the government's announcement of the second phase of the stimulus package, and number two, the defense project that the government announced over the weekend. That's also going to be very important and a positive trigger for the markets. Number two, looking at the global data front, on Wednesday we have United States data on inflation, the mortgage applications, and so on. I have given this entire entire calendar of what all data points we have from Eurozone, from United States, from Japan, from China. So pretty much a week with lots of data. Now if we look at Nifty daily chart, Nifty's 20 days moving average is around 11,040, 50 days moving average around 10,600, 50 days moving, 100 days moving average 9,800, and 200 days moving average 860. So Nifty currently trading above 220 days moving average. However, it's getting resistance on the ascending trend line of the bottom range of Nifty's recent trend. So again, looking at the options data as well, more or less what the activity that we are looking at is 11,000 price levels, 11,300, 500 and 400. So more or less it's going to be a range between 11,000 and 11,500. So at this point of time, the upside resistance is 11,300. Any breakout above 11,300, rather 250 to 300 price range, could trigger another round of rally which may take Nifty to 11,500. On the downside, Nifty has its support range between 11,100 to 11,000. So unless and until Nifty goes below this particular range, I would suggest avoid selling. Buy either on breakout above 11,300 or buy on dips around 10,100 approx. Don't try to jump in between. Now looking at Bank Nifty, Bank Nifty's 20 and 50 days moving average are coming closer. It's a kind of contraction that's happening. 20 days moving average placed at 21,950 and 50 days moving average placed at 21,300. The 100 days moving average is 20,700. Now now if you look at the daily chart, in last three sessions markets have not stayed at the bottom range at all. In yesterday's session it was a negative to positive closure. In day before yesterday's session we had a doji candle, and even day before that's I guess Friday, Thursday, Wednesday, markets were negative post opening. However, took support on 50 days moving average. So basically Bank Nifty looks sustaining above 50 days moving average but facing resistance as only 20 days moving average. So in Bank Nifty I would suggest for longs, wait for a breakout above 21,900, and in case markets break down, I would suggest avoid short selling unless and until Bank Nifty is closing above 21,000 levels. So this is what you should keep in mind: no short sell unless and until it's above 21,000 level. Just go ahead and buy. Buying you should do either on a breakout above 21,900 or on a dip taking a support around 21,000. So you can buy in case you get it in range of 21,200, 300 with 21,000 stop loss, or buy above 21,900. So this 21,000 to 21,900, this is where you have to play for buying positions. So again, make sure you don't enter into the upper range of the entire range, the upper side of the entire range, that is above 21,500 or 600 or 700 for that matter. Market would be positive even then. However, you will have a very high risk reward ratio. Your risk reward ratios won't be in shape. If you buy above 21,900, your stop loss should be 21,500 and targets would be anything approximately 23,000. So that is how you should proceed in Bank Nifty. MACD, RSI are both weaker, so I'm not much enthusiastic about the Bank Nifty. Now let's take a look at all other indices and other sectors, what's happening there. Again, to sum it up for you, Nifty may stay positive post the announcement of defense investments by the government and some relief to the taxpayers. Volatility cooling off globally, good markets to expectedly to stay in range bound. Auto and metals, as we have been talking about their positivity, same thing has happened. They have given fresh breakouts, fine buying opportunities in automobiles and metals. Energy index looks taking support above 20 DME. Even Reliance is also sustaining. So keep an eye on Reliance to buy in case energy index sustains above 20 DME, and Reliance as per the day's low of 3 days low of 2100 approx. So unless and until Reliance is trading above 2100, try to bottom fish, try to buy. Below 2100, avoid. IT is fine unless and until 17,800 is defended and should be bought in range 17,500 index. Pharma looks losing stem, not saying going negative, but looks losing that particular momentum and strength that we are looking at. So in Pharma, in case we get a breakout above 11,400 on index, go and buy. In case we don't get a breakout, just wait and watch. So that would be all in today's session. Wish you all a very happy trading session, a great day ahead. Thank you so much for listening. Abhishek Raj signing off. Stay healthy, stay wealthy. Have a happy trading day.